In focus today will be Larsen and Toubro, as the earnings that came by yesterday post markets disappointed. Anisha is here with all the highlights and the brokerage verdict. Anisha, the numbers disappointed. Is the stock expected to take a knock today?
Well, not a big knock, to be honest, Mangla, because the company has also announced a bonus in the ratio of 1:2. That might just aid the sentiment a bit. But in terms of the numbers, they were a bit weak. Yes, there are pockets of positives and pockets of negatives. It's your pick to choose what you deem fit. But in terms of the revenue, that was just able to meet the expectation at 36,800 crores. The margins on an overall basis were a bit disappointing, came in at 11.8% versus an expectation of 13.8%. And that was my biggest disappointment in the numbers. The PAT, if you look at it, optically, it looks higher at around 3,180 crores, but that is because there's also a tax element to it. But in the analyst meet, the management also mentioned about one-offs and impairments and write-offs that they had to take. So if you strip everything out, the adjusted number is better than our expectation. So beat coming in as far as PAT is concerned. If you look at the order intake, it was a tad below expectation, coming at 47,000 crores, and the company was not able to meet its overall guidance as far as order inflow and revenue is concerned for FY17. But what about FY18? They have given a guidance of growth of 12% as far as revenue is concerned and 12 to 14% as far as the order inflow is concerned, with a margin expansion of 25 to 50 basis points. What brokerages make out of it? They are mixed. We have seen downgrades coming in from the likes of Nomura and IDFC, and we have seen target price updates coming in, upgrades coming in from most of the brokerages, as the numbers to them look a tad bit stronger than expected. The highest target price is that of Jefferies. They have raised it to 2,300 now versus 2,000 earlier, and the lowest stands at around 1,840 or 1,900 thereabouts. Bank of America says that the FY18 guidance is cautious and it leaves a room for the upside. They say that the execution issues are there to persist, because remember, the company is focusing a lot on ROE improvement and working capital improvement, and that is where the sluggishness that we are seeing in the domestic execution is there to stay. Jefferies, for example, says that the first leg of upside linked to company-specific improvements has already been seen, and now it leads for the macro developments to happen to see the double-digit going forward. The management also sounded overall, optimistic and a tad bit cautious on the international operations. Let's listen in to Mr. A.M. Nayak on what he had to say about the company operations.
As we go into the new year, it continues to be very, very challenging. We have estimated 12 to 14%, huh? Or around 12%.
Order inflow, revenues is around 12%.
Order inflow is 12 to 14.
Yeah.
And revenue guidance is 12%.
Around 12%. It's not a hard-coded number.
Yeah. 0.5% here and there, 1% here and there. And our margin may improve by 0.25%, 0.25%. On the top of this year increase of 0.5%.